The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading day right here with me. And we begin in positive territory. We got jobless claims. We're below 200,000. And the S&Ps right now, we're up by 9 points. A little bit of an acceleration. 9 o'clock, we get those jobs numbers at 8:30. There's your volatility on the 8:30 jobs numbers. And we'll kick it off with the headline. How about a 3-year low? A 3-year low. Now, it's Thanksgiving. It's a holiday week. But continuing claims, they dropped as well. Initial claims decreased by 27,000 to 191,000. Boy, 1 week, though. I wouldn't put too much credence into this when you're talking about a 3.5-day week. Wednesday of Thanksgiving, Friday, half a day. That was the weekend in November 29th. Continuing claims is 1 week prior. So continuing does not include that Thanksgiving week. 4-week average, 214,000 is the number. And continuing retreated to 1.94 million. That is the highest since 2021. But initial claims, yeah, you're talking about 3 years. We haven't seen that number. We got markets pushing higher right now. S&P's up by 11. NASDAQ 100, we're up by 29 points. We're coming back up to the highs of this morning. Up 0.1%, 25,686. The Dow barely in the green. Quite a day for the Dow yesterday. We're above 48,000, we're just under that level, 47,978. And the Russell in the red this morning, off by 8. Bitcoin holding up pretty well, 92,910. Slightly in the red on the session. We were as high as almost 95,000 last night in the overnight session. Ethereum up 1.3%, 3190. Crude this morning up by 35 pennies, trading at 59.30. We jumped to yields. So we get a little bit of volatility on those job numbers. Initially, you spike to lower price, higher yield, right? Assuming, oh man, the economy is doing well. Maybe we don't need to cut as much as we thought we did. And then just like that, you go back to higher price, lower yield. Nonetheless, 10-year pushing about 4.09. Take a look at the daily. Okay, it's been a series of lower price, higher yield from that 4% area. Jump to the dollar. And yeah, the dollar's been weak. We hit a low of 98.77 overnight, 98.88 right now, and the dollar yet again rejects that 100 area. We double top from where we were in early November. We're now below where we were in the middle of November. And you take a look at this dollar on a longer term basis. You know, we talk about it. You've been in this uptrend channel since all the way to 2008. But boy, that 100 area or just above, critical area. It's either been resistance or support, and right now it is resistance. And you see going back how often, you know, you get some resistance on that level, man, 90 is in play. It was in play in 2021. It was in play in 2018. And many times before that, I brought up earlier this week, from 2002 to 2008, the U.S. stock market did tremendously well. The dollar got decimated, okay? Don't think that there's not room for this dollar to get weakened, folks. We got a cut coming up in 6 days. That's what the market thinks, okay? Odds of a cut, almost 9-1, that we're going to get a cut when the Fed meets next Wednesday, 6 days from right now. And then we're going to get a new Fed chair nominated next month. They'll be in place come May, and the market's forward looking. And we got the 10-year right now. Negative by 8 ticks. But yeah. The pressure is going to be when you take a look at this 10-year on a longer-term basis. There's your 3-year weekly, okay? We're right where we were in 2023 in terms of higher price, lower yield. And you take a look at this monthly, though, you go all the way back to 2008. The only time we've been in terms of lower price, higher yield, there is room here in the short term, okay, for them to run it hot. That's what's going to happen. You're going to get a cut potentially in 6 days, and then we're going to get a new Fed chair that's going to have an approach that's similar to the president's to run this thing hot, okay? And if they deal with inflation, then they'll have the ammunition to hike and cool the economy. Will they be a little late? Well, we'll see if that's the case. But with that in mind, you jump over to metals, and that's going to be a constant wind at the back. Gold right now, $42.34, up by $2 on the session. There's your 15-minute, down to about $42.10. And silver, call silver the big dog in the metals market recently. Slightly off the highs this week of almost $59.65. We're trading right now at $58.10. Silver off by 51 pennies. You jump over the VIX. How about a 15 handle? Very little volatility in this market. $15.94. Look at that. And yeah, you know, if you're looking for a real pullback in this market, the VIX is not doing it right now, folks. Okay, the VIX is not putting out that there's fear for a pullback in this market. And you're seeing the reaction on that jobs number. I mean, imagine, right? We have the S&Ps are pushing 7,000. We have the lowest initial employment claims in 3 years. Continuing claims, 1.91 million. That initial claims number is a holiday week. I'll be interested to see when we go next week what this week's number is following that holiday week. We're coming into the holiday season, though, and it looks to be a strong consumer season. Jump to those Black Friday sales. Walmart shares. Quite a run even the past 5 days for Walmart. Look at this run, man. 114.41. The close yesterday. This thing's been a straight rocket ship since 2023. You want to see something? Walmart. Okay. Your A leg, straight line move, okay? And let's put up the pullback here. See, just below the 382, okay? So you accelerate from almost beginning of 2024, straight line move for about 14 months. You pull back with the market into the April lows. We got a high out here of 105.30, okay? And you got quite a sell-off in February, but that was tariff volatility as well as earnings. You got up there on only 69 million on a weekly. Now, you didn't get above it in August. You started to really get above it October 13th, and you did it on 93 million. You come back and test it on lighter volume, and then you break away. Let's see. You closed out at 105.32. Check that out. The week of November 17th, you closed at 105.32. Oh, man, the high of February was 105.30. How about that? 105.32. And you do it on 146 million. Now, we've drifted higher, but this is going to be a big volume. But we're drifting a little bit higher, but that was a real break, man. You got an A to B, C to D going to 135 on Walmart. Hey, 20 more bucks on Walmart with the run this thing is on. I got to make a Sam's trip this weekend. I need a couple things. The house is getting a little light. Got to stock up on the essentials. All right, folks, markets in the green. We'll come back. We'll talk some tech stocks. Coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now up by 15 points. You jump over to Salesforce. So Salesforce, with their numbers last night, you spike higher to 261. We've backed off. You were just trading at 240, only $1 higher. We jump into Salesforce numbers. Decent numbers, but when you talk about for the fiscal fourth quarter, they're looking for 302 to 304 in adjusted earnings per share on 11.13 versus 11.23 billion. Analysts had expected 304 a share on 10.9 billion in revenue. So they're saying that for the fiscal fourth quarter, they're going to take in 11.13 versus to 11.23, but they're barely going to make as much money. Nonetheless, the guidance is growth of 11 to 12%, and they just grew 8.6% from a year earlier in the fiscal third quarter. 325 versus 286 revenue. They got as close as they could. 10.26 billion versus 10.27 billion net income. 2.09 billion. But yeah, when you talk about guidance, they slightly miss on earnings, and they beat on revenue, and the market wasn't sure quite what to make of that. And we're almost flat. That's one. Look for a little bit of volatility on the open. And, they'll figure out how to make money, but costs are a problem right now. And they have a cost problem because they're not going to bring it to the bottom line. But they are going to take in about $200 to $330 million extra money in the fiscal fourth quarter than what they were expecting, that 10.9 number. And yeah, you're growing at 8.6% revenue. The guidance implies revenue growth of 11 to 12%, and 3 points of that comes from Informatica, which they bought for $8 billion in November. Annualized revenue from Agent Force, which automates sales and customer service workflows, jumped 330% from a year earlier to $500 million. 9,500 paid deals to date from over 6,000 as of September. And hey, percentages on small numbers can be deceiving, right? I love that. I say it all the time. 330%, you're up to 500 million though. And hey, we'll see what the trajectory looks like on some of these AI revenue workflows. Salesforce, you're going to be in the green by about $4 on the open. You jump over to some of the other tech companies. Amazon shares, we're flat right now. You trade lower yesterday with the Microsoft news that they're lowering their quotas for AI. Microsoft, we're positive by a couple dollars. You jump over to NVIDIA. NVIDIA up a couple dollars. I listened to the Joe Rogan podcast with the CEO, Jensen Huang, last night. Interesting. About a 2-hour conversation talking about a variety of things, as they do in the Joe Rogan show. But interesting nonetheless. You jump over to the other chip stocks, AMD. How about that volatility yesterday on that Microsoft news? AMD flat right now. Micron under pressure again, down by about $4. Talked yesterday, they're going to stop selling memory to computers. They're going to go commercial only, and why not when you're selling to those big companies? All right, let's talk the streamers again. So Warner Brothers Discovery, we got a little volatility right now. Yeah, and that's on the breakup fee, I think. So you get some volatility on Warner Brothers. This saga's happening right now as we speak. There's Paramount Skydance. They're slightly lower. They traded lower yesterday on the news that Netflix potentially a strong suitor. Look at the volatility on Netflix. All right, maybe they made a deal. There's something going on in the last few minutes. Yeah, something just hit at 9:15. Let's see. All right, so check it out. Paramount. They're convinced their deal is going to get through. Their best effort to get this deal done is probably trying to tell Warner Brothers that it's not going to get done with Netflix because of regulatory problems. Paramount's telling them that their deal is a surety. And they're so sure that they'll pay them $5 billion if they can't get it through regulators. Oh, what do we got there? Thanks, Elo. What's Zuckerberg up to? Oh, they're going to have some cuts. Zuckerberg's going to cut 30%. Look at this. Next year for building the so-called metaverse. It's all in on AI. We don't need the metaverse. You got to admire the fact that he can just pivot that quickly, right? He's got no problem with just saying, nope, that's not going to be it. The company's name Meta, but we're cutting the Meta. We're going AI. He's going to change the name. No, he's not going to change the name, but boy, that is a pop for you. Okay. Cost cutting. Yeah. Plans up to 30% cuts from metaverse build. So what's that number going to be? All right, we'll see how Paramount Skydance and how this all plays out. Because, yeah, they upped their ante. Previously, it was a 2.1% fee that they were going to pay Warner Brothers if that deal did not go through for a breakup. Now it's $5 billion. And the bids are in. And, yeah, Netflix, they're offering cash. And we'll see if... I mean, I don't know. I don't think, and I'm biased, man. You know, I would like to see Paramount get it. But if I'm a Warner Brothers shareholder and those are close bids, we're risk-reward traders, right? Do you want to run the gauntlet that you have Ellison and his son on the back heels arguing to Trump that, man, you don't want Netflix to get bigger. We need competition, right? Whether they're lobbying, whether they're talking to them, it's a real deal going on right now. And Netflix, yeah, you better believe they should face pressure. It'd be nice for Netflix to get some competition. There's reality in that. I don't know. Depending on how close those bids are, I think I take the surety with a $5 billion breakup fee. And that's what the Ellisons, I say the Ellisons, right? That's what they're pushing. And we'll see what happens. And Comcast in the background. CMCSA. Yeah, look at this chart, man. Your only solace if you are looking to get into Comcast is you're at the bottom portion of this channel line. Comcast shares right now trading at $27. You make a low recently on the numbers $25.75. All right, so we got Salesforce. You're up by $4 on the open. Meta providing an oomph to the markets as they are cutting. Look at that move. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So Meta, we'll see how this one plays out. That's quite a pop, man. And Meta, yeah, Zuckerberg, he loves to spend money. The market finds out he's not going to spend money on the metaverse. they rejoice. Up by almost 5%. We're pulling back from where we spiked to. We're up by $29, but they're selling it on the open right now. And yeah. Executives are considering potential budget cuts as high as 30% for the Metaverse Group next year. Proposed Metaverse cuts are part of the company's annual budgeting plans for next year, which include a series of meetings at Zuckerberg's compound in Hawaii last month. Zuckerberg asked Meta execs to look for 10% cuts across the board. Standard request during similar budget cycles the past few years. The Metaverse Group was asked to cut deeper this year, given Meta has not seen the level of industry-wide competition over the technology that it once expected. Nobody cares about the Metaverse. Not yet. So those cuts are likely to hit the virtual reality group. Yeah, and I guess they're not going to be plowing as quickly into those Metaverse glasses as you may have expected. Hey, up by 4%. You jump over to some of the other equities. Google shares up by 0.2% right now. Microsoft up by 0.5%. Nvidia shares up by 0.7%. Amazon slightly in the red. Walmart down by 0.3% right now. Let's check out Kohl's. Quite a bounce on their numbers with volume on a weekly. Check out a daily. Let's see. Yeah, maybe coming back. See how we test this high, $22 on Kohl's. Jump over to Macy's on their numbers. Quite the volatility yesterday. You actually finished almost flat for the session yesterday. Slightly in the red today. Macy's off by 0.6%. Yeah, you talk about Google and the run that Google is on. If companies want to diversify away from NVIDIA, TPUs, the chips that Google makes, is a good way to do it. A lot of reason to be optimistic. The chip business could ultimately be worth more than the cloud. They could capture 20% of the AI market over a few years, which could make it a roughly $900 billion business. Now, these are all aspirational of where we may be. As you hear reports, right, of Microsoft scaling back the quotas that they're looking for when it comes to sales of some of those AI models. Let's check out the banks. JP Morgan, we've been pushing these highs for almost 3 months now. Up 1% today. Bank of America up 1% today. Look at Bank of America, man. Citi, look at this. Breaking above the highs. Citi up another 0.8. Oof. Look at this. On a daily, you do 14 million. What are we coming into? Yeah, you get a high out here of a daily of 15.7. So you break above on slightly less volume, but decent. What do we got out here? The highs of September, about 62 million, 70 million. The holiday week we did 45 million. That's a good number for 3.5 days. We're at 32. Need a little bit more volume on this move. Citi breaking above the highs of September. All right, we got some selling. Look at this. You get the Met acceleration, and boom, we give it back. Excuse me. S&Ps, we just dip into the red. Boy, so much for that. Meta up by 3.4%. Look at this. They're selling. Amazon down a quick 1 percentage point. Nvidia holds up well. Microsoft still in the green. AMD, Micron down by 3%. All right, you talk about Mr. Dell and the Trump accounts. Now, this one, I hope we all fight vigilantly to keep Wall Street as far away from these accounts as basically possible. Now, yes, they're going to need management. You know, you talk about, of course, Social Security. Can you imagine we took all that money and just put it in a low fee S&P 500 SPY, right? VOO, something like that. If you took all that Social Security money, so yes, that's great. Let's invest it. All that stuff. But let's just put it, I mean, the government could literally just create an ETF of the S&P 500 at a fee of nothing. You're going to create all these accounts, and then what? We're going to suck out? I mean, when you look at the compounded interest that accrues when you start taking out fees on all years, up years, down years, right? You go to Fidelity, they manage your money, you're paying 1.5% every year, plus fees within there, just to manage your money, whether it goes up, goes down. Hopefully they figured out a way, okay? Just buy the SPY. If that's what it's going to be, just buy the SPY. Buy the VOO, right? Put them in a low-cost S&P 500 ETF. They're diversified. And yes, you better believe you're centralized in some of the biggest tech stocks out there. Maybe you put it in equal weighted. Maybe you put 50% in the S&P 500, and you put 50% in the equal weight S&P 500. You probably just put it in the S&P 500, folks, okay? That way you make sure that you're not getting fees. It's not becoming where the fees eat up. The fees shouldn't eat up anything. It should be able to grow, compound, all that stuff the whole time, and make sure the fees aren't included. But guess what? You better believe that Wall Street's coming for it. So we'll see how it plays out. One priority of the government is to offer low-fee investment options. We have given the President and Treasury our assurances that Robinhood can dedicate the technology and capital in making these accounts as robust, intuitive as possible. We don't need Robinhood. We don't. You know, you need the lowest cost ETF. Robinhood's coming for fees. It's that simple. You're going to need a financial underpinning of it. You better believe you are. But there's very simple ways for Wall Street to be able to get this done at a very, very simple fee structure that would be the best for everybody. And hopefully they do. But boy, that is going to be quite a number when you talk about fees. All right, Meta up by 4.1%. Amazon down by 1%. Jump over to retail. Walmart off by 0.5% right now. Target shares. Yeah, we'll call it flat. All right, folks, stay tuned. We'll come back. We'll talk some gold. Take a look at gold. We'll take a look at silver. Take a look at the volumes. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Before we take a look at Tesla, for a question in the YouTube Tigers Den, Tesla right now up by about 1% today, up by $5 at $451. Now on a longer term monthly basis, okay, we're above the highs of 2021. You're coming up to the highs of 2024. We put this thing on a weekly, okay, we zoom in on this recent high we had. You know, you were up there last December, and you get selling with about 645 million shares. We get up there in this September with 522. You sell off. You can't close above there. You sell off from 474 with 471 million. So it's going to take some volume to break above these highs. You know, on a shorter term basis, you're at an area of resistance up here. And you got Michael Burry all over the internet talking very harshly about the valuation of Tesla. And here's what I'll say about Tesla is that you're trading a cult stock. That's what you always want to understand. He's the richest man in the world. He's one of the most powerful men in the world outside of politicians, that's for sure, with the wealth he has. And people believe in him. So, you know, it's a tough one to short, even if you think it's overvalued. And in the same sense, it's very tough to rationalize the value that Tesla's pushing right now when you're talking about a company at $1.5 trillion, and all of that is based on a future that is not materialized yet. You add in the $1 trillion, and what Barry's out there saying, okay, one of the things he's saying is, hey, you got a huge dilution deal going on, right? He talks about dilution many times in different equities in terms of how they're calculating, how they're qualifying those costs, and they should be a qualified cost. And Tesla in particular, when you factor in the $1 trillion compensation plan, okay, dilution is certain to come when those numbers get hit. Is that calculated? And that's on a best case scenario. And yeah, their market cap's $1.5 trillion. Those numbers only come due with vast expansion. But you're at $1.5 trillion right now, and you're at a technical area. Now, yeah, I wouldn't be buying at 452. Just from a technical perspective, that you're bumping up an area that's been resistance. You were up here in December, and before you know it, you were trading at almost 214. Now, I don't expect that's going to happen again, okay? And when did the saga play out with the president? I think this was the battle with the president, declaring he was in the Epstein files on Twitter himself. How far we've come. And I don't expect you going back to that. Elon's now out there talking about that J.D. Vance is going to win 2 terms after Trump. But we're at the upper boundary. So yeah, in the short term, I'd be taking my profits. We were just at 383. We're up by $70. You're up by almost 20% from where we were trading at 2 or 3 weeks ago, and you're facing an area of resistance. And look at this selling we have. You make a high here, 471 million on a weekly. We've only done 226. It's already Thursday. All right, let's talk some gold. So gold down about $2. Check out the volume. This is how you like to see it behave. We accelerate higher on volume. You make a high on Monday with 223,000. You back lower, and each day you back lower. We'll see today. We might get some volume today. We're already at almost 100,000 contracts. But you do 212, and then you do 169. Gold backing off on lighter volume. Silver, you break above the highs, you can't close above the highs, and you do it on lighter volume. Now we're pulling back, and same thing. We'll see how the volume plays out, but silver had a strong acceleration up to the highs of 59.43 with 138,000 contracts on Monday. Now you got above it yesterday on lighter volume and close below it. I'd encourage you folks, if you're swing trading some of these equities and you were fortunate enough to catch this run up, that you just put a stop, okay? Because we're going to have plenty of options in this metals market. We're coming into a very volatile time when it comes to determining the rate path. I bring up these articles. Never has the Fed in the last X amount of years, right, been so wide on where they think they're going to end up. Where's the R star? Where's the natural rate? Where's the long-term inflation targets of the Fed, et cetera? And it's a difficult time where you have showing signs of weakness in the economy while you have inflation persistent. That's not usually how it plays out. Companies aren't usually able to raise their prices at the same time that they're struggling to keep up with the economy in terms of bringing people in who are cutting back, right? If people are cutting back, if the economy is cutting back, the companies usually can't raise prices. They can even keep the prices the same they are. There's a lot in play. So that provides opportunity for volatility when there's that much unknowns, okay? And you're talking about yields. We've seen it play out many times, the market getting ahead of itself, okay? We're not out of the woods yet. The market's going to get ahead of itself one way or the other coming down the line in the next 6, 12, 18 months. Okay, we got a new Fed chair coming in May, and the market's going to have a lot of expectations, and we still don't know how a Fed chair is going to behave, whoever ends up in that role. But nonetheless, we got the 10-year approaching 4%, and then, the dollar will be in play as well. And right now, we got a weak dollar. You better believe that's going to help metals. 98.86 right now. A little bit of selling right after the opening bell there, 940. We got markets slightly in the red. All right, we check in on Meta. Yeah, not quite a 687 move. We give it back, but up by 3.5% right now. We'll see what they have to say in terms of those numbers. So you jump back to the Warner Brothers Discovery saga. Paramount's already lawyering up. The pressure's on, man, right? Imagine saying $5 billion breakup fee. We're going to get it done. And if we don't, here's a letter from our lawyers to Mr. David Zaslav that Paramount was questioning the fairness and adequacy of the process. It has become increasingly clear through media reporting and otherwise that Warner Brothers Discovery appears to have abandoned the semblance and reality of a fair transaction process, thereby abdicating its duties to stockholders and embarked on a myopic process with a predetermined outcome that favors a single bidder. You gotta love lawyer verbose. We specifically request and expect this letter be shared and discussed with the full board of directors of Warner Brothers. The battle is on. They're going to make a movie over this one. All right? The battle's on. For Warner Brothers Discovery, you're backing off a bit. Markets in the red. One more segment. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets slightly in the red. Yeah, we got quite that acceleration. On the meta news, we spike higher and boom, market opens and we sell off. We're approaching the lowest NASDAQ 100 off by 0.3%. You take a look at the heat map, Meta in the green, Nvidia up by 1.3%, Broadcom in the green as well. Amazon, Apple, Google, check out Micron off by 4.2%. Costco off by 2.7%. Let's take a look at Costco. Yeah, Costco's got some issues, man. Technically, this thing's been in a downtrend since February. Let's put this thing on a monthly. You know, you ramped up with selling all the way through October, November. You got a slight bounce, but boy, you did it on a lighter volume month, and we're trading lower again this month. Now, December's going to come in a low month, but look how every time we touch that line, you trade lower. Costco under pressure. From who? Sam's. Now, Walmart's only up from 105 to 114 over that period of time, but you look at the run that Costco's been on, you're down, 16, 17% from almost 1,100 to 900 in that same period of time. Target, they're on even a worse path than Costco. It's been going on since 2021. On the flip side of that, TJ Maxx, baby. TJ Maxx and Mickey D's. Look at Mickey D's chopping around in the bottom part of its channel line as well. Two of the best channels out there. Mickey D's, you're going back to 2015. McDonald's up by 1.2%. There you go. All right, folks, thanks so much for tuning in. Kicking off your trading day right here. Stay tuned. Basil Chapman, he's coming up live with the Tiger Technicians Hour. Steve Rhodes at 11 o'clock with the Trader's Edge. Fast Market at 12. Larry Pesavento coming up with Trade What You See at 1 o'clock, and I'll be back at 3. Have a great one, everybody. Basil's coming up now.